Hi, Jim. This is Tim in San Francisco. I should say also that on your recommendation, we started a Utah 529, but realized we couldn't get a tax break in California. So my family and I will be moving to Utah so we can get the tax break on that Utah 529. So we're excited about that. My question today is, should we be concerned that U.S. homes may decline in price over the long run? The reason I ask is because it seems like prices should be determined by supply and demand. Supply can increase, but the U.S. population growth curve is flattening out and maybe population will fall. So could demand fall and prices fall? I think maybe in Japan, houses depreciate, not appreciate. This is particularly concerning because there's a lot of effort to try to get more people into housing, especially people with low net worth, as a mechanism to build wealth. And I know that housing hasn't been a major generator of wealth through appreciation. I think it's like 1% real over the long run. Of course, there are implicit rents, but should we be concerned maybe of a secular change in housing appreciation behavior? Thank you.
Good question, Tim. My crystal ball is cloudy. I don't know what U.S. housing prices are going to do in the long term. Could they decline? I guess. Seems pretty unlikely to me, but anything could happen. All I know is I just came back from my trip and I got my property tax bill for the year or estimate for next year, whatever it is, and it just went up 60% because they think my home is dramatically more valuable than it used to be. And and it probably is based on what housing prices are selling for around here. Even without the renovation we've done, because I'm not sure the tax authorities know about the renovation yet. Our house has more than doubled in value since 2010. And, Utah is certainly, on the edge of the market changes we've seen in the last few years as lots and lots of people have moved here for our little mini tech boom. And of course, the space is constrained between the mountains here in Utah. And so I wish you luck. Of course, you're moving from San Francisco, so maybe houses will seem so cheap that you'll say, oh, it's only $800,000. I'll take two. I don't know. But here's the deal. We don't really know what's going to happen with houses in the long run. If you knew, of course, you could capitalize on that, but you don't know. And so what is the right move to hedge that bet? Well, the right move is if you're going to be in it for a long time, a house is generally a good investment, even if it doesn't appreciate. Because remember what your return comes from with a house, right? You are saving rent. And, I suppose if the price of houses fell, the price of rent would also go down. But at the same time, you've basically locked in that rent with your house when you buy it. And so that's the dividend that your house pays. I don't think it's, the greatest return in the world that you'll ever have, but it certainly provides a solid return for a portion of your money. And it also makes sure, there's a roof over the head of your loved ones, at least once it's paid off, no matter what happens to you in your financial life. So once your professional and personal life are stable, I think it's time to buy. It is not necessarily, obviously there's going to be better times and worse times to buy, but you really can't time that to your life because the cycle is so long. For example, obviously housing prices have gone up dramatically in the last few years. What you don't know, however, if you decide you're going to wait to buy until housing prices crash again, is you don't know if they'll even crash down to the level they're at today. You just don't know. And so I think it's better not to try to time it. Wait until it's the right time in your life to buy. And remember that in general, in real estate, time heals all wounds. If you're going to be in there for 15 or 20 years, you're probably not going to have to worry about actually having a positive return on your investment. Hope that's helpful, Tim, and welcome to Utah. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
My dad, your host, Dr. Dahl, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.